recording. Okay, I'm just gonna introduce myself. My name is Chris Hendricks, and I'm part of Manando's Trading View Academy. So I am joined with Dr. Keen. Or how do you pronounce your name, sir?
Adriano?
Odiano.
Yeah.
Okay, no problem, Dr. Odiano. So today we'll be looking at US30 as well as other indices. So the way you trade indices, it's a bit different compared to currencies. So indices are more volatile, as you know, because I'm sure you have some type of background.
Yes.
So you don't have to really scale up to the big time frames. You can use the hourly time frames. So
Yeah.
in our case, we're just gonna scale down to the 2 hour time frame.
Okay.
Is everything clear to you, sir? Can you see everything clearly?
Yes, I can. Yeah.
Okay, no problem. So we're gonna focus on the current market, and I'm just gonna highlight the current market for you. So this is the current market. This is the current market, right?
Okay.
So with the current market, I'm just gonna scale down, zoom in. So the first thing that you need to uh, spot is the highest high and the lowest low. You're aware of what those are, no?
Yes, yes.
Okay, so I'm just gonna use my horizontal ray to spot the previous highest high, which was around this area,
Okay.
and the previous lowest low, which is around this area. So you can
Okay.
see that currently the market really just it broke through the previous highest high,
Okay.
and it went back inside.
Okay. Yeah.
You can see that, huh?
Yes.
So what this means is that this whole movement right here was basically a false breakout. Do you know what a breakout is?
Oh, yes, 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 yes.
So this was a false breakout, meaning that this was just to trap traders into buying positions. So if you thought this was a breakout and you placed buying positions, it was probably gonna kick you out, as you can see that it went back inside and
Yeah.
started selling off.
Yeah.
So in order for you to catch this movement, you check how the trend is. So previously the trend was an ascending trend, ascending, which means the price was just going up. It was going up. So you're
Yeah.
just gonna place your resistance and your support of the trend line of the trend.
Okay.
As you can see, it was an ascending trend, and it ended up squeezing and just broke out to the support.
Yeah.
So I'm just gonna scale in, and we have this distinct rule where we have, in order for you to consider a trend, you have to have a consistent consistent touches of about three uh, touches on your trend line. Whether it's a buying trend or a selling trend, you need to have three touches. In case of a selling trend, just like this one, you need to spot your resistance. So in your
Okay.
resistance, you have this as your first touch. Can you see this?
Yeah. Yeah.
This was your first touch, and this was your second touch, and this was your third one, right?
Oh, yes.
Which means the third touch has the highest probability. So you need to always know that the third touch always has the highest probability. So you need to look out for the third touch.
Yeah.
You trade the third touch because it always has the highest probability. Anyways, so you can see that we spotted our touches on our trend line. We know the trend, which means it was an ascending trend, which broke out and started selling off. So in this case, what you need to do is, are you aware of an impulse and correction movements now?
Oh, yes, I am. Yes.
Okay, so I'm just gonna illustrate it just to recap. So from the third touch, you can see we had a distinct descending movement or an impulse to the downside.
Yeah.
And the price from this point, it was just a corrective now.
Yeah.
As you can see, so I'm just going to remove that and try to spot the correction. So I'm going to scale down to the hourly time frame and focus on this level. So you can see, do you remember our highest, the previous high, no? This
Yes.
horizontal ray is from the previous high.
Yeah.
So you can see that our trend went from the third touch, rejected all the way back inside the horizontal ray, went back up, and it rejected on the previous high, which is just hold on, which is this point right here.
Yeah.
So it rejected on that previous high, which is here, which means it's back within that trend, meaning that it's a double top formation. Do you know what a double top formation is?
Oh, yes, 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 I do.
So it's basically an M pattern where the top is relatively equal, meaning that the price is most probably gonna go to the downside.
Yes.
Okay, good. So in our case, the price did reject. So now we need to structure our correction level. So I'm gonna start off with the support of the correction.
Okay.
And now we have our resistance of the correction.
Okay.
So remember that we use the third touch as our highest probability. So I'm gonna illustrate the third touch from the highest or the second touch on the previous highest high. So we had this down impulse and the price
Yes.
rejected, forming the first touch, and the price was corrective. This was our second touch on the correction, and we consider this as the third touch. So remember, the third touch has the highest probability. So this point was our third touch, meaning this part has the highest probability, meaning that you could have placed your trade at the third touch, which had the highest probability, which meant that you reduced your risk uh, for a selling position. So I'm gonna spot out why or how we have three touches. So this right here was our first touch. Can you see this?
Yes.
This
Yeah.
was our first touch of the correction, right?
Yeah.
And we had this as our second touch of the correction right here. And as you can see from this point, hold on, from from the second touch, we had a down movement, and then the price went back up, giving us the third touch. So these two touches right here count as one touch, because from the support, which is this level here, we only had one movement to the top or resistance, which means we consider these two touches as one touch to the downside.
Yeah.
Do you understand?
Yes.
Okay, good. So we had a distinct 1 2 3 touch or 1 2 3 touch formation, and the price really sold off to the downside, which means we are in a downtrend. As you can see from the high time frames, we were in a downtrend because of the double top, even though the price really just broke out, but then it formed a false breakout. I'm just gonna highlight it once again.
Yes.
This was the false breakout. As you can see, the price went back inside within this double top right here. So meaning we're gonna scale this trade around 70%. So are you aware of the 90% rule?
Yes, yes. The line drawn from here.
So this part is the 90% rule because it is consistent with the beginning of the ascending structure, no? This point right here.
Yes, yes, yes,
This
yes.
is the 90% rule. So we're not gonna scale our trade to the 90% rule because it doesn't always get to the 90% rule. So the safe percentage is around 70%, which means it's gonna be around these areas right here.
Did you play this drop off yesterday, the market sell off? Did you play it?
Sorry?
Did you play the sell off yesterday?
Let me quickly check.
No, you didn't
Um,
play it. If you had played it, you will have known.
the
What
thing
I'm asking is, did you trade yesterday?
I personally didn't trade it, but I think Manando did. So but I think I did analyze. So I'm just gonna quickly go through my screenshots
He
and try to see.
he must have made a lot of money yesterday.
I personally didn't
Because-
trade, but I'm just gonna show you the screenshots. So let me
Okay,
just share my screen. So this is the analysis that I had from I think the 24th, which was around 3 days ago.
okay,
So you can see it is consistent with what is happening currently because we had the ascending structure right here, and the price sold off, forming the impulse to the downside, giving us this correction right here.
okay.
So it is consistent with what we're looking at right now. As you can see, this is the correction that we had, and the price is going to the downside right now as we speak.
Yeah,
So I did see the sell off, but I didn't enter the trade.
okay.
Yeah, I just sent a signal to I think one of the groups. I'm not sure because I had so much going on, but yeah, I did see that it was a selling setup.
Yeah, sell off.
Yeah, it was a nice sell off, but it's still going. So for you to catch
Yeah, it's still good.
Yeah,
Yeah,
for you to catch the following setups, because this price could give you the second opportunity, or well, the third opportunity, as this third touch right here was the first opportunity to sell off, but
okay.
this was considered as a risk trade because you didn't have enough
Yeah,
influence for you to make sure that it's actually selling through confirmation. But this this correction right here was enough confirmation for you to enter a sell. But if
okay.
you did miss the sell, which means you're gonna have to wait for the price to form another correction for you to get to this level right here. So
Yeah,
you should really watch out Monday or probably Tuesday, early Tuesday. The price is probably gonna form a nice correction where it will give you a distinct 1 2 3 touch, where it will be this is the first touch, this is the second touch, and the third one then is gonna sell off as it did previously. Because the market actually repeats itself. So for you to confirm this 1 2 3 touch, I'm just gonna show you previously what happened. So as you can see right here within the trend of the ascending structure, you had a correction right here. So I'm just gonna use the drawing tool. So you can see we had 1 2 3 touches before it bought to the third touch of the resistance. So this was the first touch, second touch, and the third one right here. Can you see it?
Yes, I can.
Okay, so which means if you had seen this or spotted this, you would have entered this trade until the price touched your resistant trend line.
Yes, yes.
You could have utilized this trade like that.
Yeah.
So remember, sorry,
How many pips? How many pips?
it's about 4% using the measurement tool. It's about 4%.
About 14 pips. Okay.
Now it's not 14 pips, it's 1600 pips.
Okay, 16 pips. Okay.
1600, which means 1600.
Wow. It's true. It's true.
Yeah, because
Hi. Chai.
because this is remember this is the 4 hour time frame.
Yeah, 4 hour time frame. Yes.
So which means it's a very huge trade, meaning
Yeah.
that from this point you would have held for about 26 bars, which meant 6 days.
Wow.
6 days and 8 hours. So it was a
Wow.
huge trade, but
Yes, it's a swing.
yeah,
Swing trade.
a swing trade.
Wow.
So this 1 2 3 touch trading style will minimize your losses because now you have enough confluence. Confluence meaning more than one confirmation.
Confirmation. Yeah.
Yeah. So
But do you advise your clients to trade inside the trend? Do you think it's good to trade inside the trend, inside the range? I don't like to trade inside the range.
for an example, you wouldn't have taken this trade because it's within a trend, eh?
Exactly. Don't you think so?
The thing is, the market moves within in two phases, né? Two phases,
Yes.
which
Yes.
is an impulse and
And
correction.
correction.
Impulse,
Yeah, this sounds like correction.
yeah. So the trade, you should take your trade within the correction. So you need to catch the next impulse.
Okay.
So meaning that you need to spot your impulse
Yes.
and
Correction.
determine your correction with the 1 2 3 touch formation so you can catch the upcoming impulse.
Okay.
Are you following?
Yes, I'm following. Yes.
Okay, good. So you're gonna witness the next impulse, I mean the correction, because right now with this one you can see we are having a nice deep impulse to the downside. Can you see?
Yes, I do.
So which means the next phase will be a corrective phase, meaning that it will be an opportunity for you to utilize the correction and spot out when your third touch is. And once your third touch has formed, you're gonna enter according to the candlestick formations. Are you aware of the candlestick formations?
Yes, I know about yes, right?
So it's like your weeks, your morning stars, your evening stars, your dojis, and so on. Are you aware of those?
Yeah, ascending channel. Yes, I know. I know about evening star.
Okay,
Yeah,
good. So,
evening star is a bearish candle.
okay, let me just zoom in so we can look at the type of candlesticks that we had on the third touch of our correction. So I'm just gonna remove this, and so we can have a clear chart. Hold on, give me a moment.
Yeah, that's an evening star there.
So this huge uh
Doji.
reversal candlestick, which is considered as a doji, you can see that this was it gave us a confirmation that the price was about to reverse and go to the downside, which it did, and it was very aggressive.
Yeah.
So it
Because
validates our
because
one,
of
two,
the
three touch
news.
formation.
Yeah.
So you need to use these candlestick formations. You need to use the correction formation as well as the trend and which phase you're in. So you can place a very safe trade. So you can see after this evening star or doji, the price really just sold off to the downside. It didn't even bother buying or anything. It just went straight down.
Yeah, it's because of the news yesterday. It's a fundamental
Yeah,
because
besides the news, now
Jerome Powell,
you asked me about the news. Now
the
you asked
chairman of the
me,
Fed.
yeah,
Yeah.
yesterday or the day before, I'm not sure, but
It
you
was yesterday, the chairman of the Fed made a statement, and then the market didn't like it. Everybody sold off. Nasdaq, S&P, everything sold off, you
I
know.
was not aware of the news, but then yet I I I knew it was a selling trade from the 24th of
Yes,
August
yes,
because of the trading style and the
yeah,
phases, which means I knew it was a double top, which gave us an impulse from the double top, and it gave us a correction, which meant that the price was continuing to the downside. So I didn't even need to look at the news. I don't even consider news. I just trade according to what I see,
yeah,
and it worked out because it went the same direction as the news. So I didn't
yes,
even have to read fundamentals
yeah.
because the trading style that we use, it catches the fundamentals before they even happen. So you don't even need to stretch yourself watching news.
Wow.
So which means you could have caught this trade, which I did, but then I didn't really trade this trade because I was busy with other personal things. So I knew it was a bearish trend before the news even came out. So you don't even need to worry about news because I know a lot of traders they worry like, oh, the news today, so I need to trade accordingly or what. They consider the fundamentals so much that it even affects the trading. But you don't even need to worry about fundamentals because once you get your strategy working and you can trade accordingly to your strategy, it will work hand in hand with the fundamentals. So you don't need to worry about keeping up to date with what is happening with the news and whatnot. So in this case, you can see that without even knowing the news, we were able to catch the sell off, the huge sell off, and I'm pretty sure that it's gonna continue selling off around this point, which is probably gonna be 70% or 75%
Yeah.
to the downside, but then it's about 7% with this pattern, or 2,357 pips.
Yeah.
So you could have used this strategy just to utilize the movement of the fundamentals.
Yes. Yes.
Okay, so this is the setup
US.
with US30. So I'm just gonna jump into Nasdaq, which is roughly the same thing,
Yeah.
but it's slightly different, but then it's roughly the same thing. As you can see that it's similar according to the movement. So I'm just gonna draw the previous high, which was around this level.
Okay.
And you can see that we had an ascending structure like this with your support and resistance to the downside. And if I zoom in, you can see that we had a huge impulse from this point. We had a
Yeah.
huge impulse followed by a correction and an impulse, which means the following phase will be a correction, which will be probably later during Monday
Tuesday.
or
Tuesday.
early Tuesday to the downside.
Yes.
Okay, good. So for you to catch this trade, you probably would have recognized um, this corrective movement right here, like that. So I'm just gonna validate our 1, 2, 3 touch movement. As you can see, this is okay. Let me just get my tool. So this is the first touch of our resistance, the second touch of our resistance right there, and the third one.
Yeah.
Remember, the third touch always has the highest probability. So you could have waited for this to form out and give you 3 touches, and you would have utilized the third touch, which is right here to the downside. So remember,
I make it.
which is very important, the third touch, 1, 2, 3, third touch always has the highest probability.
Yes.
It minimizes your risk by at least 80% or roughly 90%, which means you will hardly lose your your account by using this strategy.
Yes.
So you can see where 1, 2, 3 touch, the 1, 2, 3 touch formation, and if you zoom in, you can see we had a reversal or a rejection right here. As you can see, the price bought to this trend line, and then it rejected and closed as an evening star.
Yes, exactly. That's evening star. Yes.
So
That's
which
a shooting
means
star.
which means you could have waited for the evening star to close and the following candlestick to close, and you could have entered on the third candlestick, which was this one. So you can see from the
That's
third,
a risk. That's a risk entry.
it's not a risk entry when you are using a small lot size and using a stop loss, because you could have set your stop loss around these areas if
Okay.
you had used a very small lot size, because the down movement, it was quite massive, because you can see risk to reward ratio was quite obvious that you didn't lose most of your account, but then you were in the opportunity to gain more than you could have lost.
Yes.
Because it's a similar setup as the US30.
Okay.
Because remember, US30 and Nasdaq really go hand in hand, but then it doesn't mean they would necessarily form the exact same patterns, but then it will be similar. So the direction will always be similar. Either
Yeah.
one is early and the other one is late, but then they'll always end up going to the same direction.
Which pair do you like to trade most? Which one do you like to trade? Do you like indices, or do you like synthetic, or do you like currency?
I usually prefer indices because indices is very quick to grow your account and make
Yes.
money. You don't have to wait
Yeah.
a week or
Somebody that played the news yesterday, he made 300,000. 300,000.
with what.
With he played Nasdaq yesterday, and he made 300,000
Yeah,
yesterday.
because you can see this, if you had a big account and you used a big lot size, you would have made a fortune.
Yes.
So it just depends on the type of account that you have. If you are trying to grow a very small account, you could use currencies and just apply the same strategies
Principles.
or trading style with this
Yeah.
one. But then with currencies, you just need to trade within the bigger time frames. You need to scale up and start analyzing from an example from the daily down to the hourly time frames. But then with
Top down. Yes.
yes, so with indices, you usually start with uh, the most you could do is the 4 hour time frame down to the 2 hour time frame, 1 hour, and then for you to spot your um your your setups or your